Hi, this is Erik Epp, and this is a weekly summary for the market as of November 19, 2010. Here is a table that comparing the end of last week to the end of the previous week, and also the end of last week to the end of the last options month. This also happened to be the end of this November options month, which lasted 5 weeks. So just a couple things to watch here. Basically, the market did absolutely nothing. It's pretty flat for the week, and it's slightly up for the months. This is 5 weeks for the months. The average daily range between the high and the low for the SPX is still 13 points, which is pretty tight. It's been around like that for about 3 months. And the main thing to watch here that the VIX, or the volatility index for the SPX, is now reaching 18, which is quite low. Here is a year-to-date chart for the SPY, which is the SPX ETF. So very quickly, the black is obviously the SPY movements. The yellow line here is the 20-day moving average, and the blue line is the 50-day moving average. The resistance lines are basically the previous tops for the market, so as you can see by the red line here, and also by the red line for the tops for the relative strength index, which is just an indicator to see the momentum and the strength of the market. The other line here is the trend line, which basically connected the bottoms together, and the next possible line that the market may drop to, which is a support line, which is basically the previous two highs. As you can see, the market went up and down before it actually penetrated to the upside, and therefore now it became a support line. So what the market can do from this point, it went below the 20-day moving average here. As you can see, it didn't actually reach the 50-day moving average, and it bounced slightly up. So at this point, it basically can, the two best possibilities are it will either pop up to the red line, which is a resistance line, and then go down again, or it will go down, penetrate the 50 moving average, and hit this support line, and at that point will either bounce back up or it may penetrate it down. The other thing that it will have to do in order to go below the 50-day moving average is penetrate the trend line, which usually when the trend line is penetrated, it indicates a good possibility of a change of direction for the market. Here is the SPX and the VIX chart, the volatility index. On top is the SPX chart, and below the exact correspondent for the same time period, the volatility index. So things to notice: when the VIX goes to the bottom, to the lows, the SPX usually reaches some kind of a top, as you can see by the purple lines. When the VIX reaches a high or a top of some sort, then the SPX usually will reach a bottom of a bottom, as you can see by the green lines. The red line at the right side is as of November 19, and the VIX at that point closed at 18.04. So I just put 18 on the chart. So it's closed at 18, which is, as you can see, quite low comparing to other periods. Although it can go as low as 15 compared to the previous periods, but 18 seems to be relatively low at this point, which could indicate that the market maybe is going to turn downward again, which means the SPX will start going up again. Of course, we don't know for sure, but as you can see, this is what been the trends in the past. So it's very good possibility that it will repeat itself. So this is for today. As always, keeping it simple is smart, which stands for KISS, as the acronym for KISS. Thank you for visiting us and listening to this tape. Please visit us at kissoptionspicks.com or call us toll free at 888-266-4137. And once again, thanks for watching, and until next time, hasta la vista.